evening and welcome to CNBC-TV18 Market Report. I'm Nisha Poddar. Let's start with the proceeding with the big news of the day coming in from the deal space, and the Nasdaq-listed Videocon D2H will merge with Dish TV to form the largest pay TV operator with 27.6 million net subscribers in the country. Now, the Videocon D2H shareholders will be allotted 2.021 Dish TV Videocon shares for each share held, and the proposed transaction is expected to close in the second half of the year 2017. Dish TV Videocon will continue to be listed on the exchanges, and the current promoters will continue in their roles. Of course, the promoter company here is Dish TV. Let's take it across to the two partners who are joining hands and joining us right here on CNBC-TV18, our Managing Director of Dish TV, Jawahar Goel, who's going to be the chairman of the newly formed company, and Videocon Executive Director Saurav Dhruth on the phone line from Mumbai is also here with us. Gentlemen, so good to have you on CNBC-TV18. It's a big deal. Many congratulations to both of you. Jawahar, coming to you first, did you accept Videocon as a principal shareholder by choice? The market understanding was that this was going to be an acquisition by way of merger where Videocon promoters could have been squeezed out.
See, the arrangement of the scheme is a merger, and we never emphasized a buyout. So, and Mr. Saurav Dhruth is going to be DMD of the company, a merged entity, after we had done the completion post all the permissions. So this is what is arrangement is, and Dish TV promoter will have a resultant equity holding of 36%. D2S promoter will get 28%, and the public will have 36% equity.
All right, so that is the equity holding of the newly formed Dish TV Videocon D2H. Saurav, coming to you, you'll be the DMD of this newly formed company. What have been the dynamics of the deal and the valuation of this sale process?
So the boards have approved to have a scheme of arrangement. The combined entity would be called Dish TV Videocon Limited. Dish TV shareholders would comprise of in terms of ownership of the new entity of 55.4%, and so around 45% would be owned by Videocon D2H shareholders.
All right. So, Jawahar, help us understand the equity valuation, because 7,200 odd crores is looking like is the equity valuation, while the enterprise valuation of the company Videocon D2H as per this transaction is 9,000 crore rupees. On the higher side?
When we say that the Dish TV valuation is 55 and 45 ratio, so the rationale has been discussed by the board and presented by the consultant who has been engaged as specialist for the transaction. So there are the criteria of whatever is the industry norm in the this space in Indian market and in media space globally. So the factor has been applied. So and we respect and we have to respect and obey the judgment of the consultant and the board.
Right. So that's but from market standpoint, and let me pose this question to Saurav then. Saurav, of course, when we first reported this transaction, CNBC-TV18 was the first to report it in August. At that time, your Nasdaq-listed entity was sub $800 million in terms of market cap. Now, it did shoot up, and the valuation of equity that you are pegging at for this particular acquisition is 7,200 crore rupees. That is over $1 billion. It is on the higher side.
I don't know. I have not done the calculation to do the EV, but the Nasdaq, we have never discussed this transaction. So the Nasdaq shooting up to anything is definitely not a case from that perspective. In this case, let's say if you get very granular, Dish TV shareholders would own something like 1066 million shares. Videocon D2H shareholders would own 857 million shares. And this is an all-stock combination swap ratio reflecting the relative values of each business across operating, so like financial and trading metrics. So subscribers and subscriber additions is factored in, revenue, EBITDA and growth is factored in, and trading metrics are also factored in. So the combination combines Dish's scale and profitability with D2H scale and growth. And the scale and efficiencies benefit emanating from such a combination will be a win-win for all stakeholders.
All right, so win-win coming in for both. But Jawahar, let me pose your question on the debt side. What will be the combined debt of this merged entity? Because Videocon D2H comes with a large amount of debt, as Dish generates a free cash flow of about 400-500 crores. And on the other hand, Videocon has debt. So don't think that Dish will be at a disadvantage with this kind of a deal?
Post-merger, which is or completion is around 7-8 months down the line, will be around 2,100 crore. And EBITDA, as reported in the last financial numbers in the past, it is around 1,800-1,900 crore. Now the question you had raised is the cost of debt. In terms of Dish TV, we had a fairly reasonable cost of debt, and the debt will definitely be the Dish TV debt, which will be coming at the same price or a better price going forward. So the problem of high cost of debt should not be there.
How much of a reduction in the finance cost are you anticipating by way of this merger, Jawahar?
Dish TV has its own rating and a practice and relationship. So this will, as the completion happens, we will see and answer the question appropriately.
All right. Talking about debt component, of course, now, since it's a merged entity, you are going to be a partner in this combined entity. So how much will be the debt reduction overall for Videocon Group? And going forward, is there a chance of debt reduction as well? Because we thought that the whole idea of this deal emanated because of debt reduction from the point of view of the lenders.
Well, we already have Videocon D2H and its equity. This combination is more about unlocking what more one can do with the satellite distribution space. I don't think there are other drivers to it. So, for example, I would say that we are very excited about the long-term benefits of the skill sets that the two companies bring to the table. You can imagine that a DTH operator catering to over 25 to 30 million subscribers would benefit from huge scale advantages. The merger would lead to significant cost synergies as well as enhance our ability to grow alternate revenue streams like carriage, advertising, value-added services, new channel launches, and these are all very highly margin accretive. So the proposed combination shall create scale benefits for all stakeholders. There will be better growth opportunities for, of course, employees, expanded sales service network, larger distribution network. But from an economic standpoint, for our shareholders, which includes the existing Dish TV and Videocon D2H shareholders, the merged entity will drive value unlocking from combined sourcing, purchasing, product development, improved distribution, customer service and support, network and infrastructure consolidation and capex.
All right, Saurav, so hold your thought there, and Saurav as well as Jawar, we'll get back to you with more discussion on this large transaction. Stay with us. We'll join you after a very short break.